Speaker for the day, Shri S. P. Tulsian, Chairman of the Corporate Members Committee, Mayavila Convener, Office Bearers of the Chamber of Tax Consultants, past Presidents of the Chamber, and my dear friends. I welcome you all to this program, Budget Impact on Capital Markets and Investment Environment as a Current Economic Scenario. Much awaited Indian budget was presented by the Modi government. First reaction of each and everyone was that NDA budget has followed UPA. No big bang announcements and so on. But other thought was that new government has only 45 days to produce the budget. And long budget speech specifies portent a clear break from the past. They intend to lay path, set deadlines. Government understands the need to revive growth in manufacturing sector, infrastructure sector, and the growth in GDP. Government is committed to the roadmap for fiscal consolidation by maintaining the fiscal deficit at 3% in 16-17. I believe this would be without any accounting general. Long overdue decisions to promote FDI in selective sectors has been announced with the intention to review overall FDI. However, they preferred administered route rather than automatic route. Finance Minister also talked about various things in the infrastructure sector: highways, waterways, airports, revival SMEs. He has projected for developing 100 smart cities and digital India. Various incentives in the housing sector liberalize labor laws. Growth in Indian economy is dependent on savings. It has increased the limits for the PF contribution. Revitalized small savings schemes by introducing Kisan Vikas Patra. Vanilla national savings certificates were further added with the flavor of insurance cover. Increase the limits of investment in PPF. Also extended tax bracket under the income tax. At the same time, reduced tax breaks under the infrastructure capital bond schemes. Also laid the favorable tax regime for REITs, InvITs. Clarified tax regimes for the FII. Considering the Basel III norms, the capital of the banks is required to be raised. One of the ways it has been done been through the raising the shareholders of public shareholding limits in the phased manner. The proposed introduction of uniform KYC norms, intelligibility of KYC records across the financial sector, introduce single demat account. On tax front, they increase the rate of DDT. So the corporates remains with the less amount of dividend which they can. However, in case of mutual funds, the rate has gone to 43%. They also increase the rate of capital gains on the mutual funds other than equity-oriented mutual funds. To understand the impact of these policies, Corporate Member Committee has thought of this unique program and compliment the committee for the novel idea. I understand some of the attendees are non-member. For the benefit of them, I would like to state few words about the Chamber. Chamber is nearly 90-year-old organization. It has membership strength of around plus 3,500 plus members, comprising of chartered accountants, advocates, tax practitioners, CAs, and corporates. The Chamber functions through 13 committees. One of such committees is a Corporate Member Committee who has organized this program. This year, Chamber has started a new committee for students. The objective of this committee is to cater to the needs of students who are the future torchbearers of the profession. The committee's prime focus is to equip the students' skill set required for execution of the work of our members. Chamber also publishes monthly journal called Chamber's Journal, covering various articles on tax and non-tax areas. We also represent regularly to the government authorities when the pre-post budget was done, and it was also done to the ministers. With these few words, I once again welcome you all to this unique program, and I request Vipul Choksi, Chairman of the committee, Thank you.
President Paras, Sri S.P. Tulsian, the Speaker, Nehal Kamar of the committee, past President, committee members of the Chamber, and friends, very good evening to all of you. It gives me immense pleasure in welcoming you all to this unique program, the lecture meeting, I would say, on capital market. As the President said, the corporate member committee basically organizes programs which would cater to the needs of corporate members. But we thought that we also need to have a program which would interest all the members, and capital market, most of the people or the population of India were looking at capital market post the election of new government. And the capital market is a barometer of the economy, so to say. And therefore we thought that this is the right time to have a lecture meeting on the subject. We couldn't have a better speaker than Mr. Tulsian. In fact, most of you won't be knowing me, but you definitely know Mr. Tulsian. To formally introduce Mr. Tulsian, he is a commerce and law graduate from Bombay University. He is also a chartered accountant and a company secretary. He was awarded with Podar Ratna Award by R.A. Podar College, Mumbai in the year 2010, which has been conferred to only 25 Podarites since his existence over 70 years. That's indeed an incredible achievement. Armed with academics and acute sense of logic, Sri Sasikant Tulsian is a much sought after fundamental analyst today. Mr. Tulsian started investing in the stock market since 1975. And at that time, according to him, the need to earn some pocket money was what led him to the path of stock market investment. Investing and advising on stock market has been his passion and way of life for the past 39 years. He started a hugely popular and well-respected weekly tabloid, Premium Investment, as its editor and publisher in January 1991. Published in 3 languages, English, Hindi and Gujarati. Adapting to the changing time, in 2007, the tabloid evolved into an online portal, providing timely and apt investment advice on his website, dedicated website, of which Mr. Tulsian is the editor and CEO. His quotes on the sugar, cement, oil and gas sectors, regulatory policy issues and Reliance groups are often considered to be the last word. The media and investors rely on his advice, which is seen and considered as unbiased, true, forthwith, free and frank, and in the best interests of the stock market investors. As also is often quoted in the leading financial newspapers and journals like the Wall Street Journal, Reuters, Economic Times, Navbharat Times, Business Standard, Times of India, Forbes India, Financial Express, etc., etc. Work hard, do good, and lead a modest, simple life. That is the philosophy of Mr. Sasikant Tulsian, a staunch karma yogi. Tulsian is a name to reckon with in the Indian investor fraternity. With these words, I introduce to you Mr. S.P. Tulsian, and request the President to deliver an intro.
other dignitaries, ladies and gentlemen, good evening to all. First, let me thank the Chamber for giving me this opportunity to address the eminent tax practitioner here. And I did feel proud privilege to interact and address my views on the budget and the impact of the budget on the capital market and what is the road ahead. before that, before I take a call on the budget, I have made a brief presentation. I think that firstly, the change of guard at the center or at Delhi should be seen as a godsend opportunity from the. I'm giving this as unbiased view. I'm not affiliated to any political party or I'm not affiliated to any individual politician. But the kind of turmoil, the kind of confidence crisis, the kind of high-handedness, the kind of policy paralysis, which we have all seen in this last maybe couple of years, if not more than that. Or maybe I would say that last 3 years have really been very torturous, very bad, very painful, whether you talk from an investor point of view, a professional point of view, economic point of view, or maybe from a common man point of view. And I think that Narendra Modi coming as a new leader at the center, I see this as a godsend opportunity because there is a say that जब चीजें हद से ज़्यादा पार हो जाती है तो even that at that stage the government, the God also comes and interferes. So one should not take this as just 1 year phenomenon or maybe 8 months or 9 months phenomenon of this budget. In fact, this government has tried his level best to present a picture or maybe to present a roadmap which they are committed to execute and comply most of the promises which they have made here in this budget in this next 4 years. Because we all know that politician will always remain as a politician. So they will be all having their compulsion in the last, that is in the 5th year, where we may see some populist measures and all that. But you have 48 months is a good time for any government to work and really execute the plans which they have promised and which they have demonstrated or which they have hinted while or before coming into the power. And I see this Narendra Modi as a change of promoter in any company because we have seen that happening in many cases. When the promoter of a company changes, the stock price of that company gets vastly related and we see maybe 3, 4, 5 times increase happening. The classic case happened in the United Spirit. As long as it was in the Vijay Mallya fold or maybe UB Group fold, the share was ruling at 400, 500. The moment DAGO has come in, the stock has moved to 2400 maybe in this last couple of years. Obviously, of the expectations that he will be moving out, some new strong hands will be coming in. Same thing is happening even in the case of why we are not trying to pass any strictures or I am not trying to be sarcastic. Even within the family, if you really see the Birla group, one Birla stock is discounted at a very poor multiple or has a very low perception, while the other group has a very high perception. The same thing is visible in case of Ambani group also. Take the case of Century Textile, the movement came or the transition process seen happening in case of Century Textile from BK Birla to Kumaranandam Birla. We have seen the re-rating or the improvement in the valuations of the stocks happening. So this is a general phenomenon that whenever you see the changes, we all see in the cities, when the ring roads are all planned, the peripheral land area values, start going up, maybe it goes up by 4, 5, 6, 7 times. That has been the general case because this has been the phenomenon all over. So Narendra Modi coming as a promoter, coming as a leader at the center, I see that as a change of promoter, and that is the reason we have seen vast improvement in the valuations of the PSU stocks. But yes, now one can say that the low-hanging fruits have all been plucked by this market. Or maybe sometimes the market has gone overboard or over-exuberant in case of the poor quality or maybe small cap or mid cap kind of stocks. I'm not saying that the market, it doesn't have the ample opportunity. In fact, I see huge opportunity in this market over the next 4 years. No point in taking a call. People just ask that what will be the index after 4 years, 5 years. Those are just the number game, I may just, to please you, I may say that, okay, Nifty will move to 25,000 after 5 years. But it doesn't hold any meaning unless until you really make money in your investment. So yes, the caution, the prudent investing is very much desired in the market. I'm just trying to give you I'm not here to explain the whole budget. I have just taken the policy initiative this government has taken up and on what, in which areas and on what parameters they have really moved. So, I in fact see four major areas in this budget, or maybe the four focal point. You have four pillar of any institution, any structure or any government. What generally all investors have been screaming, and largely if you really see the overseas investors, see an overseas investor or maybe an NRI has a lot of opportunities. In fact, what we have seen today, because of the yield having moved up by 10 basis points in the US market has become very apprehensive that people probably may shift from equity to the fixed return instruments, and that can be seen as a very big negative because the money will start, flowing from equity to debt. And these are the things, because they have practically the whole globe available to them for making investments. So they have always been repeatedly asking for taking the definite and positive steps in that direction, which I have outlined here. First is a fiscal consolidation, which this government has repeatedly focused on. If you have heard the Arun Jaitley, the finance minister, he has very confidently and very categorically said, I'll come on that part little later in my next slides. He has said that 4.1% fiscal deficit for the current year looks difficult, but I'm sticking with taking this as a challenge. Those who have all heard the economists or maybe the market experts, everyone were expecting that 4.1% is impossible. And even if he gives a fiscal deficit of 4.5, 4.6, I think the market will accept it happily. But what has happened, the moment he has said 4.1%, these experts, have started saying, oh, this is not achievable. You accept that these are not achievable. 4.5% is going to be the realistic fiscal deficit for FY15. Never mind, don't dispute that. But why to jump on the conclusion so early? Yesterday we have seen the trade data, the industry data. They have been quite encouraging. Same thing, in fact, people have talked. I agree. I'm not saying that 4.1% cannot will get easily achieved, because there may be some ambitious targets having set on the corporate tax or maybe on the service tax. They have shown a growth of 30%. My actually worries more that views have been expressed by me earlier also in my earlier presentations, or when I covered my speeches on the budget, that actually I am disappointed on the revised estimate which were given by the government for FY13-14. If you all have gone through, if you have seen the estimates, revised estimates, they are same, which were presented by Chidambaram in his interim budget on 28 February 2014. My point is that at least the government or maybe the bureaucrat or the machinery should have changed those figures, because they are still quite ambitious. So the base on which you are relying upon, because I am calculating 30% plus growth in my service tax based on those revised FY14 figures, which itself or which they themselves are inflated, or they are in fact not to the actuals. They are maybe overstated by about 3, 4, 5%. So you have little worry or little difficulty in achieving maybe 30% growth, which has been estimated for service tax, is going to be 34-35%. Maybe difficult, because generally in case of service tax you always have the advantage of collection because of the inflation and because of the nominal GDP growth, which is about 13-14%. Because if you take GDP growth of 5.5% or inflation of 6.5-7%, you get a nominal growth of 13%, and the about 12-13% or 14% normal increase in the service net and all that, new services coming into the list and all that. But the base which they have presented are all overstated, which is slightly difficult, which is slightly unwarranted. They should have been a little careful. But anyway, the fiscal consolidation they have touched upon. What are the areas, what are the points I will cover in my next slide. Second, they have talked of the inclusive growth. If you have all seen in this last 1 year, everyone, leave aside maybe about 100,000 people, maybe 1 lakh people in the country, or you can say 1 lakh families, they have been really enjoying the major portion of the growth or the economy or the wealth which the country has been, accruing every year. Because people have been, even the middle class, upper middle class have been saying that we are left with nothing. The growth is not inclusive or widespread. It is concentrated in few hands. So he has touched upon the growth, because without growth and without control of inflation, you cannot really manage the economy, you cannot really make the people to survive, you cannot really make your economy vibrant, including capital market. So he has focused on inclusive growth. Then third is focus on infrastructure. In fact, if you really see the infrastructure, the backbone of any economy, even if you see the developed countries in US and Europe or maybe Australia, still the government is thinking of spending huge amount on the road developments, airports. Those who travel frequently, we must have seen, take the case of Dubai. The kind of infra explosion which we have seen, maybe the airport, they have constructed the third airport in this last 30 years, and the kind of planning which we make are all for next 10 or 15 or 20 years, and even there we lag behind to a great extent. So yes, this time we generally, the moment you talk of infra, we just talk of road and power. We have never really gone beyond thinking on these two areas, which are in fact, in my view, just a small portion of infrastructure. You need to talk of the industrial corridors, you need to talk of smart cities, you need to talk of port development, you need to talk of inland water management, you need to talk of transmission distribution, you need to talk of building the road, you need to talk of the smart cities. That is what precisely they have focused in this budget. And obviously the lacking part, or maybe the policy paralysis, was the main culprit for the poor economic growth of this country in this last 2 years, where the predecessor of this government has failed miserably. We have all seen the coal scam, we have seen the 2G scam. What they were, in fact, they were more of the holding, not of the execution. What people did, they just, the mines were allotted, coal mines were allotted to very few people. They were never exploited, they were never developed, so the production never came in the market. Still, we are importing the coal of $18 billion per annum, in spite of the country having the largest coal reserve in the world. We have a deficit of about maybe 160, 180 million tons of coal. Coal India has never been able to achieve the targeted production, which they have said last year, 500 million tons, they achieved a production of 460 million tons. So here their main thrust has gone on the infrastructure. And as I said, I'll try to cover these few points on the infrastructure also. And again, we all know that infrastructure needs a lot of capital. Huge capital is required. You cannot execute those projects unless and until you have a very high saving rate in the country. Maybe about 8 to 10 years back, the saving rate was 36-37%, which has fallen to 30% in this last year. So you need to prop up the domestic saving, you need to encourage the foreign capital into the country. Bullet train project, which Narendra Modi or which his government has talked of in the railway budget, you all must have heard. From Ahmedabad to Bombay, 120 crore per kilometer will be the cost. I know that is just an ambitious project, and I have my doubts that our country can really see the bullet train projects even in the next 2 decades, because we don't have that kind of capital, let's admit. So we should not totally take all the projects having announced by this government as realistic. Maybe that is their ambition, maybe that is their dream, but that is not going to be seen the light of the day. 60,000 crore, can you expect that 60,000 crore will be invested on Bombay? The fare will be about 5.5 rupees per kilometer. I don't think that anyone will really be prepared to pay that kind of money, because maybe the air travel will be cheaper. But what my point is that don't take that bullet train project as the don't treat all other projects as ambitious, because you can always substitute the bullet train project maybe with a high-speed train, for which the trial has already been carried out from Delhi to Agra. where the investment is required is just 2 to 2.5 crore per kilometer. So let's be practical. So this government also knows that they have been setting the rigid standards, rigid expectations which may not be able to get achieved by this government. But yes, the things are at least clarity, intention, and roadmap is there. So focus on infra is a big sector, big move in this budget. And last is the inflation control. We have, in fact, if you really see again why UPA 2 has lost this election, largely because of the inflation. We all are victim of that. Why to talk of the lower strata of the society? We say that okay, maybe the poor man, even for the upper middle class, you all must have experienced and noticed that even in our meetings, we practically either belong to the middle class or maybe upper middle class, and even we talk of the price rise in the vegetables or maybe the cost of living going up so high. So this government has tried to focus, and some proactive steps have all been demonstrated also. One should not take the current yardstick, okay, we have compared the price of tomato with prices going up, but yes, some proactive steps have all been taken by this government. Take the problem of the electricity, in Delhi. That problem has been persisting for last 15 years, and Delhi, mind it, was ruled by Congress. What had happened, I remember when this government came in, Aam Aadmi Party, Congress, everyone has started shouting. If you all recall, couple of months back there was huge, the moment this government came in, there was huge power problem. Obviously in the last week of May they came into the power. On 26th May they sworn in this new NDA government. And all the political parties, whether we talk of Congress, Aam Aadmi, or maybe all other parties, that what this government has been doing, they have inherited this problem and they expected them to solve the entire thing in 15 hours. See, the worst part of our country is that opposition is such a bad word. If BJP is in opposition, they have always opposed the positive move and aspects of the ruling government. And same thing is, but see how this government has made them why? By solving that problem to a major extent. Do you see now the problem of Delhi power problem is being talked on the news channels and all that? So what my point is that yes, they know that each and every problem has to get resolved by them, and inflation control is the utmost priority to make the people remain happy and survive in this economy which they have focused. So these are the 4 pillars on which they have really focused, and they will be taking the big steps. Coming on the fiscal consolidation, we have talked about, let's see the sub-paras or the points which they have initiated in that direction. Fiscal deficit target for FY15 is set at 4.1%. Take that as 4.3, 4.4, 4.5. But I don't think that people will really be disappointed, and more especially the overseas investor, because we all know that he has accepted that as a challenge. And in fact, while speaking on the finance bill in the upper house and the lower house in this last week, finance minister has said around Jayatri that a lot of provisions have been made on so many social projects, and that amount is not likely to get spent. Maybe an amount of 7,060 crore on the smart cities. He just said that is just to draw a blueprint. It is not likely that entire amount is going to get spent. So we may be having some cut in the expenditure. We have seen the austerity, the expenditures being cut by this government. In fact, Narendra Modi, he is sitting with all the, he is overseeing all the ministries. That they can't go with the lavish spending and all, which we have seen in the previous government. So fiscal deficit of 4.1% for FY15, 3.6% for FY16, and 3% for FY17, which is the mandate of the FRBM, Fiscal Responsibility Management. So I think that this government is committed in that direction. If not, maybe by 20 basis points here and there, but I think they will be able to achieve to a great extent, if not in FY15, it's in FY16. Second, they have gone for the subsidy reduction. The first move they have initiated in case of the fertilizer subsidy. We all know that fertilizer subsidy is taking away a huge portion. We have about, probably this year, if you have seen yesterday the data, probably the oil subsidy will take away maybe about 100,000 crore or maybe 110,000 crore, largely on the LPG, largely